Hey traders, today is Wednesday, July 29th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the Japanese yen. It is Fed Day, and the FOMC rate decision's on tap later this afternoon. We have the BOJ rate decision also on tap later in the week. Here's what the dollar yen looks like. We've been tracking this ascending channel formation off last year's low. We saw a nice clean break of the yearly opening range in June, and that rally having us look for a fourth quarter high. That rally now extending into 164. That's the 1618 extension of just this year's opening range breakout. So we're looking for a reaction here. Again, the monthly opening range just recently broke higher. So heading into the close of the month, you do have that push behind you. However, momentum is now approaching near-term resistance right at that 70 threshold, right on the cusp. So you can envision a scenario that if we do see a topside breach, a close above 164, momentum is able to mount 70, you get that next thrust needed to validate the next major move of the advance. If you take a look at what's been going on with yields, here's a quick look at the overlay with the 10-year yield. We saw a massive divergence in that correlation mid-year last year. Since the start of this year, it's starting to correlate and line up pretty nicely again. And the 10-year yield now approaching pretty much the range highs for the last couple of years that we've been in. But we'll be looking at both of those to see if we can offer a tell on dollar yen in the days ahead. Here's what it looks like on the daily chart. A nice ascending pitchfork we've been tracking just off the May lows. We're up more than 5.8% off that low. And again, a breakout last week of the objective monthly opening range was very well defined. That took us into confluent resistance. 164, you're also looking at the median line for the ascending formation. We've been tracking off that May low. So really nestled right below resistance, and this week's opening range has been exceptionally tight right there. Drill down even deeper. Here's the 4-hour chart. So you can see the interior levels here on the 25% parallel, really nice inflection. Here's your weekly opening range set right above 163.33, which is the 1618 extension of the advance off of the 2025 low, so using that entire advance. And that's also now the weekly opening range low registered on Monday. So confluent support over the next day heading into this afternoon is going to converge right on that channel support, and a break below 163.33 would be the threat for a little bit near term of a pullback here in dollar yen. All things held constant, you're still in this strong uptrend. Bullish invalidation, we're now raising to the objective monthly open. If we get back below 62.56, that would invalidate the monthly opening range break and certainly would suggest a more significant highs in place and a larger reversal would be underway. For the bears to reassert control, you would need to see a close below 61.69 into 61.95, this zone right here. That's the 2024 swing high, the 2024 high close. Losses below this zone would put the bears firmly in control. Now on the upside, topside break above 164, you're looking for 165. That's just a psychological barrier that converges on the median line, basically into the close of this week, into the open of August. So all things held constant, we're still constructive. We've got a clean weekly opening range break nestled right below resistance. Look for this breakout over the next few days. Now, the BOJ is also on tap later this week. First, we get the FOMC later today. No changes expected. However, an interesting dynamic has materialized. Economists are pretty much unanimous with the expectation that we're not going to see the Fed move on rates today. However, if you take a look at Fed fund futures, markets are still pricing in a 35% chance that the Fed could move. So an interesting dynamic there. If you head out to the September expectations, we're still pricing in an 80% likelihood that the Fed will have to hike rates. So the devil's going to be in the details, obviously. We're not expecting much from Warsh. We know that he wants to play this pretty close to his chest. Not a big fan of excessive Fed talk. And so the focus will be whether the committee or whether Warsh sees the falling oil prices as an improvement or at least a positive development for the inflationary outlook. Later this week, we still do get an update on inflation on Thursday. Core inflation and headline are expected to soften slightly on the headline read from 4.1 to 3.7, on core from 3.4 to 3.3. So this does not take into account the recent price spike or drop that we just recently saw. All things held constant, if dollar yen is heading higher on this stretch, losses would need to be limited to 62.56, and would need to see a confirmed daily close above 164 to validate the next move. You have 165 as that psychological barrier. Beyond that, the 200% extension of the 2025 advance goes all the way up into 67.55. And again, on a breakout runaway trade, you're looking for that next major extended approach above 165, but 165 should be a pretty major barrier if reached. Approach this with caution. One last note. The sentiment, our client sentiment on our positioning continues to be heavily skewed on the short side with 89% holding short positions. So the market's very heavily loaded on that. If it breaches 64, a clearing out of that short side may propagate the trade even further. And on the other side, if that support side breaks, you might see some profit taking also. Kind of keep that in play. So we'll try to keep you updated as always on MB Forex. Remember, the Fed hits at 2 p.m., the presser's at 2:30. Then we get the CPI figures later in the week. And finally on Friday, the BOJ does have a whole host of data coming out. Aside from that, we are also looking for jobless claims or unemployment rate. The Tokyo CPI figures come out, retail trade, and then again, the BOJ. Not expecting any changes from the BOJ. With all this talk about intervention, one of the things the BOJ could do is hike rates in an attempt to sort of stem this yen weakness. Doesn't look like they're going to do that, but we'll look to see if that is even an option and comes up in the discussion. We'll try to keep you updated as always on MB Forex. Till then, best of luck trading. We'll see you tomorrow. Cheers.